Chinese assets shares slide notwithstanding Beijing assurance on mortgage protests. Hong Kong shares in embattled Chinese belongings builders fell on Friday as homebuyers' threats to forestall loan bills on unfinished residences outweighed Beijing regulators' warranty that local governments gets help to supply assets projects on time. The regulatory remark got here as threats to withhold payments for stalled property projects have proliferated in authentic and social media in current weeks. That has deepened investor worries about China's property quarter, which bills for 1/4 of the world's second biggest financial system and has been a pillar of boom via the remaining two a long time. It wasn't without delay clear whether any homebuyers had started appearing out on threats to forestall mortgage payments. The Hang Seng Property Index, monitoring a set of mainland-based assets developers, fell 1.2% with the aid of the midday buying and selling rec on Friday, dragging the Hong Kong benchmark index down 1.2% additionally. Among the ones toughest hit, shares in Longfor Group Holdings Limited had been down 4.5%, at the same time as Country Garden Holdings County Limited fell 5% via the noon rec. The drop got here despite Chinese state media sporting reports late on Thursday citing an unnamed China Banking and Insurance Regulatory Commission (CBIRC) reputable pronouncing the regulator will enhance coordination with housing and production government, and China's critical bank, to again local administrations in making certain the shipping of homes. Also on Thursday night, nearby regulators in Xi'an, a city in West China, mentioned they would tighten oversight of escrow debts and ensure cash placed down by domestic proprietors isn't transferred illegally with the aid of property builders. A loan price strike would threaten to kill a nascent recovery in China's capital-starved property region and hit banks with hefty write-downs, analysts have warned. Things will worsen earlier than they get higher, mentioned Xiao Shizhong, China finance analyst of Chinese research group Gavical Dragonomics. China has been decided to shrink the leverage taken on via assets builders, and the government will nevertheless try to refrain from providing liquidity to them in a huge scale. It will take time for a few more targeted measures to be issued, she mentioned. As assets companies' stocks weakened, a sell-off in banking stocks also gathered steam amid investor concerns that the mortgage charge halt risk might also snowball if not checked in a well-timed manner, worsening banks' credit profiles. In Hong Kong, industry benchmark dropped 0.8% through noon. Tommy Xie, head of Greater China Research of OCBC Bank, mentioned the mortgage compensation suspension as popping from a liquidity disaster for property developers to a financial crisis, and has made it pressing for the important government to step in.